Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Wednesday, August 2nd, 2023. First, hopefully all of you read the comment that I left on my own update last night regarding that what came out shortly before the Globex opening was Fitch's downgrade of the United States, and from AAA to AA+. And initially, it created a gap down opening on Globex, but the market kind of just bought it back up. So I quickly put it on just to reflect that this news could be the shock, could be the surprise, and produce some heavier downside, or we would have to wait and see to how the market reacted overnight and then again during today's session. Well, that's now in. And so what I can now put back up was my finishing count, basically, that I had presented prior to the market attempting to bounce off of that initial decline, which is now labeled wave one again. So in essence here on the S&P, I have put the 5, the minute 5, the minor 5, the intermediate C, and the primary B back at that 4634.50 high. That was a resistance level. That was a fib resistance level for a couple of different parts of this. For minute 5, it was a resistance level. For minor 5, the 100-point level was a little bit higher at 4650. And then the intermediate wave C, I think, had already surpassed, but the 1.678 was way above. And then, of course, primary B had already gotten past that 100-point level. And so it was getting ready to work towards its 1.618 level. In any case, I'm marking it here. The reason that I put it back is, number one, when the market came down and broke below, which would have been the bottom of wave 4, right? Because remember, 3, and then the 4 would have been here as A, B, C. Now, if for whatever reason, we want to start considering that this is an expanded flat or something that has come out, and somehow want to put the 3 back up here, and the 4 still now being engaged, that can work only under the following: A, B, and we're in the C wave, and look where wave 1 comes in, 45.24. Today's low, 45.27. So what if you want to hang on to that? Suggests, and what you need to kind of put into your thought process here, is that it can't break below 45.24. Even if it retakes it, it can't break below 45.24, because as soon as it does, wave 4, but that's what this would be, right? Wave 4 would be taking over or overlapping wave 1, and that is no good. That is no good. Inasmuch as wave 2 can't overlap or exceed the starting point of wave 1. So on several levels, it just works out that this is more than likely the count. The decline was very sharp once it got going today. And in the first hour, hour and a half of trading, they really just brought everything down. And the NASDAQ was at that point was down well over 400. The Dow, I think, closed more closely to where, that those levels were. And the S&P, closed on an uptick, closed only down 60, almost 67, we'll call it. Whereas the low for 45.27, put it at 73.74, almost 75 points. That's a pretty big move for the S&P. on an intraday basis. And it wasn't like it was a panic. It was just really very steady, just selling, 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 selling. Not like, oh my God, get out selling, just very consistent selling. Had those upticks, then it sold, then it had an uptick, then it sold. So it seemed very calm without too much panic. But here's one thing that I did notice, and this is interesting. This is already reset, but it was up $1.75 today. Now, we need to understand, and I'm just going to go over this real briefly because I think this is important. VIX, they've already taken them off, expires on Wednesdays. So they had an expiration this morning, and it expires first thing in the morning. So remember, I've been talking about how this trade, this volatility trade, which has been propping the market higher, what I will be paying attention to now is when it reverses, when it goes to the other direction. And by that, what I mean is they're buying index volatility and selling underlying volatility. Could that have reversed today? Possible. Now, you know, we've had other days during this dispersion trade being selling index vol and buying underlying vol. We've had days where the market's been down 200 or 300. And yeah, the volatility reacted, but not like it did today. Today it was more in line as like, oh, okay, volatility is going to increase because we believe and we feel that the risk is to the downside. So index risk to the downside. Market correcting, market shifting, whatever is going on. Now that added to also why I went back and I thought, I see a lot of things turning, so I'm going to be more comfortable placing this here. Are we out of the woods yet? I hate to say, sure, yeah, most definitely. And then we come in tomorrow and the market just does something really silly. Because guess what? We still have tomorrow after the close, Apple and Amazon. Both Apple is in all of the indexes. Amazon is in the NASDAQ and the Dow. Excuse me, NASDAQ and the S&P. So again, not really knowing what those earnings are going to be. We can only just take a guesstimate on what they might be. But if you noticed today, Apple for better part of the morning and into the afternoon sessions, fought tooth and nail to hold above 94. Then it gave it up. Then it was to hold above 93. Then it gave it up. And then it was to bring it back above 92. So slowly but surely, they're giving it up. I'm not sure position-wise, whatever the situation was, but the buyers were not willing to walk away from Apple. Could have been also that they were just buying a ton of puts in Apple, and that the hedge for when you're buying puts like that is to buy the stock. So who knows? In any case, back to the S&P. I feel that we are in a third wave. I do feel that we are. And again, the degree here may change, but right now I'm starting off on a minute degree. So minute wave 1, minute wave 2, and we're in the minute wave 3. And what I can best kind of go is like maybe 1, 2, and let me just see if I can open this up a little bit so we can see inside. Bring it up that way. A 1, 2, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, 3, 4, 5 of the minute 3. So I'm already looking for that additional. Little additional bounce possible. All right, now it's only 7, and we can't really see an ABC, at least not on the hourly chart. So allow for a little bit of extra bounce, and then we come back down, and we cement this in because likely going to break below 45.24. So, and should. Now, if we just start throwing up some Fibonacci as to what we think this all going to come in as, let's the first, we're going to put in this one. Now, this larger one is actually for that in primary C wave. And you're going to see that where that starts to come in. But let's take a look here. And let me clean that up. I got to go change these settings here. Don't like those anymore. That and that one, that one, that one. And we'll use 2.618 in case they really blow this thing out in wave 3. So here we have it. So right now we've kind of slid through 382, 5618. We've reached 100% at 41. And now we probably try to rally back to it. Again, moving averages now all pointing very hard down after today's sell. You got the 20, you got the 8, you got the 4, just really beeline to the downside as this market slid lower. So we're going to see that turn, but I think that even the 200 after today started to go. I can move this up real quick and take a look at the daily again for our moving averages. We broke below the 20 and closed below the 20. That automatically tends to drive us into stronger selling tomorrow. Now, what would prevent that is if overnight, and then they keep it up, when we reopen tomorrow in our own regular session, that the market manages to get back above the 20, the daily 20. That would prevent maybe this next round of selling to come in. But even today, the gap and breaking the 8, the 4, all now pointing lower, the 20 beginning to turn, the 50 getting flat, the 200 getting flat, suggesting that rally's not happening anymore. It looks like we're going to go down. That was the daily. Now, so the premise would also be that if we break that 20 and we continue lower, where is it headed? The daily chart would be headed towards the 50, which sits at 44.38, 44.38. So back on the hourly chart, let's open it up so we can take a look. Well, if we reached 100, we've exceeded it, and substantially. It was like 45.41. The low was 27. The bounce back, perfect. Elliott-wise, we get a nice little 4, and then we get another another 5th wave down to complete minute wave 3. We could actually come in pretty much anywhere inside here, but I need to kind of just let this kind of play out a little bit more to even put some fibs together for the internal moves. But right now, my eyes are set for 4,500. Once we start to break below 24, then I think it should be a quicker ride down to this level. So it's 4,500 down to 44.91. There may be some points in between. If I bring this back over a little bit, we're looking for price support. We do have price support right there. That's where it stopped. Right? We go to the lows. You're watching what I'm doing. I'm going over to the lows. So I go as far left as I need to go. Then we have this, which we know it can't break. But should it break, we'll find some support. You see how quickly, because of that decline? We got a little bit of price support at 4,500. Then we have it down at 44.96 and 44.91. So that's why I'm coming up with if we start to break that level, because it's mostly rally in there, our price points really drop pretty quick. So that's why I think once we can start to drop again, we get below 24, it should be fairly a quick drop down to 4,500 to 44.91. And that's where I think we'll finally finish wave 3 and then put in a minute 4th wave bounce with still an additional 5th wave to come. Now, if it really gets hit hard yesterday, this is all prior to the earnings, then we could extend one more time within wave 3, 2.618. Wave 3 would be 2.618 times the length of wave 1 not so uncommon, brings us down to 4,400. Now, there was at a point today that the index was down, 75 points plus, the NASDAQ, excuse me, the S&P. So to consider that maybe it could drop 100, 120, very possible. Very possible. Just depends on what the market tends to do. Of note as well was the bond market. Yesterday, and even during Globex, when we got that news that the United States had been downgraded to AA plus, the bond market popped just a little, not a lot, but they were buying something for whatever the reason was. And then today we saw, it is not good for interest rates, because the Treasury and the Fed have a job to do coming up. The fall into this September, I believe it is going to take place. There's a lot of need, and there's going to be auctioning off, I think, $1 trillion worth of debt to meet what we need to run the government. So that, I think, started to sink in a little bit today. If the question is on we're downgraded because of the brinkmanship in our government, because of the debt ceiling battle that took place, because of the brinkmanship that was being displayed there. And that is the primary reason why Fitch decided, no, we're not going with this anymore. You took the United States government to the brink of default before you finally gave in and decided. They made it political. You can't. Not when you're not when the world is invested in your debt. No. So we got downgraded. Not a good thing. So we can blame whomever you think you want to blame, but I don't really care. The brinkmanship was evident. The drawing the lines. Well, guess what? We're going to go through it again, if not this month, next month, because we have funding needs. So could they run this one again? And we've got to get a defense bill passed. And they're already threatening to shut down the government unless they get their way. So if we're put here again, what do we get? AA, they take us away? Not AA plus, they just AA. So we move from extraordinary or super good to excellent, which is AA plus. What do we drop to then? Questionable. So again, the political game continues, and the damage is being done. And don't forget that the last time that the country got downgraded, and that would be its debt, its bonds, was in 2011, when we were threatened with a government shutdown. And again, it was over interest rates. And again, it was over how much money is going out there. Again, how do we're going to continue to support, et cetera, et cetera, et cetera. And it's so bizarre that politicians just don't really get why. They're like, oh, we're too debt. We got too much debt. It's like, really? So what would you prefer, that we just all declare bankruptcy? And then, the whole gig is up? So in any case, enough there. Back to the market. So I do think that we have an additional sizable leg down, but we got a little bit of a bounce. Maybe due now. Maybe it'll drop first. Then we get a little bit larger bounce in the terms of a minute fourth wave instead of an internal within wave 3 down, an internal smaller fourth wave. And then we get that last leg down to finish minute 3, looking for 4,500 to 4,490, with a more serious selling coming in, taking it down even further. And then we would be able to fill in some of those blanks once it were to begin. Once it started to break, there'll be other points where it could stop before 4,400. So everything is kind of lined up for that to begin. Again, if you're working on this to think that this is an A and a B, and this is somehow, we move the 3 up to here, we move the 4, still in progress. Even if you want to consider this somehow an expanded flat, by some means, it cannot break there. 45.24. Actually, the exact number is 45.23.75. There, break there, it starts to overlap. And to be honest with you, you can't really say, oh, it only overlapped by 25 cents or 2 ticks or 3 ticks or a point. The rule is the rule. So if I'm gonna keep it intact for a second wave, you got to keep it intact for a fourth. Over in the NASDAQ. NASDAQ, very similar now, also took it on the chin today. We saw the trade unwind in NVIDIA. Unwind big time. Remember, this was the one that I thought at the very end, I thought, boy, they're still doing that dispersion trade, but it's really being done in NVIDIA. And we just rally. I mean, the market would be going down, and here's NVIDIA just going up. And so I think it was that volatility trade that helped to propel it higher. And now it seems like it was being unwound. This stock was down over $30 at one point today. So it's bouncing, but we'll see. We'll see what starts to happen. Don't forget, this trade is far and wide, and it's big in Apple, and it's big in Amazon, and it's big in Google, et cetera, et cetera, et cetera. So when we start to see it get unwound, i.e. Meta, i.e. Microsoft, i.e. NVIDIA, i.e. Netflix, i.e. Tesla, when we start to see it get unwound, then we know what the result's going to be. So here, we're in that minute third wave. Wave 3 would be equal to wave 1 at 15,334.25. And I'm like, I suspect that the third wave is going to be longer and stronger. We already saw the internal do so. So I am actually going to look for that to break. And if I open this guy up a little bit, I got to go to the 4-hour chart so you can see if somehow we're working that same basis. Wave 1 is at 15,432. Let's take it back to that hourly chart. We got down today to 15,413. So this whole thing cannot be anywhere near a 4. Even if I were to put it there, or you think it's still in progress here, no longer. It broke below wave 1. So that pushes that back up here. We got the whole thing. Minute, minor, intermediate, primary. All done. Wave 1, ABC, wave 2. That's the difference. It was always there, but I gave the benefit of the doubt that it was going to go up and start really moving. It didn't. So you push the alternate over to the preferred, make your adjustments. And that's what I've done. So I know a lot of people are going to tell me, well, wave B is 5 waves. It's like, no, it really isn't. So, but we can argue the point. In any case, I might just, you could put this A, B, C, B. And we had a big irregular in the middle of this ABC. Right? A, B, C, B, 1, 2, 3, 4, 5, C. So before, if I was going to label this ABC, and then we're going to finish it there, and this was the C wave, which it would have been. It remains a C wave, but this gets recounted. Okay, so where are we? Same type of a deal. We got a very subdividing third wave. I'd have to start 1, 2, and I got it 1, 2, 1, 2, and then another 1, 2, 3, 4. We probably got them inside here. 4, 5 of 3, 4, 5 of 3, 4, 5 of 3, 4, 5. So I think, yeah, by the time this thing finishes and gets all the way down here, we do get the opportunity that it's going to slide below 15,334, and likely had start heading down towards that 15,000 level. So we were up at the upper end. In fact, we were above 16,000 briefly, but we were. And then we have spent a lot of time churning around 15,700, 500 up to 900. Now we're heading back down. So a lot of fluff up here above 15,000. If they start taking that off the stocks, as we started to witness today, well, what happens? It all comes tumbling down. What happens when that volatility trade gets reversed or just is put on in the opposite direction? The equities or the underlying, which right now are stocks, are component companies within the index, are going to get sold. So we got a lot going on. So yes, I'm expecting additional downside. Initially, we're looking for that. That should provide some support. It may drive right through it. Next up, once we get through there, we're going to come over here to where we got some price support. And so we should drop from 334. We can get down pretty quickly below 15,300. And we still don't have any support, to be honest with you, until we're almost down to here, 15,100. So how quickly we dropped here was due to the lack of support, price support. It just wasn't there. And when this started to break and that started to break, it was here that we found some. We went through it, came back to it, went above it, went below it, and came back to it. That's the point they're trying to rally themselves around, 15,483 or 15,480, and then up towards 15,500. All the moving averages still pointing down, the 20 really playing catch up here, like, whoa, barf, and then turn. So a lot of stuff continuing to say, yep, it's a quick turn. Yep, it's going. And we'll just follow it and see what we get. Now, tomorrow, again, we have, I got to get my other stuff back. So, nope, latest, no, nope, more. Nope, I got to get onto my, I'm trying to get to where I get market data center, US, cryptocurrency, US. What data comes out tomorrow? We have initial unemployment claims coming out tomorrow. And let me just go here. Yeah. And so tomorrow on the 3rd, we have initial jobless claims, US productivity, the preliminary for the second quarter. It's going to come out at a reasonable number, but how will it help? We'll have algorithms that likely will bounce off of that. But see, economy's doing great. Does not mean that's going to continue. So at 8:30 a.m., initial jobless claims, U.S. productivity. That's the preliminary for the second quarter. 9:45 a.m., S&P final U.S. services PMI. 10 a.m. ISM services, 10 a.m. factory orders. So we got a bunch of numbers coming out, and I'm really believing that most of them are probably going to not turn real well for the market, but they could. We don't know. We'll see. And in the meantime, that's all I'm going to present for today. Our next update will be on Thursday. Also, please don't forget that tomorrow after the close, Apple and Amazon. Next update, Thursday, August the 3rd.